revenue is awesome, but like how much money are you actually making?
And keeping.
Revenue obviously has expenses that comes off it. So everyone loves to do the addition, but no one loves to show you the subtraction, which actually matters.
Hey everybody, welcome back to the VIP Financial Ed YouTube channel. My name is Matthew. We talk all things cash flow maximization here, including but not limited to my favorite business models that are out there. And if I were thinking through my list of those that have shown up over the past couple of years that I'm really most attracted to, this would be at the very, very top of that list. We actually just wrapped an interview with a gentleman who, with Michael and Katrina's help, actually went from nothing, from zero, and within his first 45, 60 days is already at around the $100,000 in revenue mark. Michael and Katrina caught my attention back in the summer of 2020 when I noticed a Facebook post by them that was announcing that they had hit their 1,000th booking through short-term rentals. And they were well underway to hit $1 million in revenues in their very young business, which was actually still under 2 years old. And so I reached out to them immediately. I said, listen, I want to know more. I'd love to have you on the channel. And from there, it's been a really great working relationship. In fact, they recently launched a coaching program that they have shared with our audience. They give a 33% discount off of that for our audience, at least for the time being. That is expected to go away. So take advantage of it while you can. You can email them at BNB Bootcamp at VIPfinancialeducation.com, which I'll put in the description below. That is not the purpose of the conversation today. The purpose of the conversation today is to respond to the many requests that I've gotten over the past several videos that we've created together, which has said, show us the numbers, right? This is a numbers-based audience, guys. If this is your first time to the channel, make sure you consider subscribing, go back to some of our old content and watch how we pick apart the nickels and the dimes in real life examples that show how we grow cash flow. And we do that through maximizing our credit so that we can get access to capital and then put that capital to work by way of both growing income and assets as well as accelerating debt elimination. So we pay debts off very, very quickly. Now, what I love about this model, and then I'll get to Michael and Katrina and shut up, is the fact that this does not, in many cases, require much money out of your own pocket. In fact, our two systems marry very well because I show people how you can get access to the capital that you do need, the limited capital that you need, in order to start generating exponential cash flow to what you would get if you were to go out and actually start buying long-term rental properties, which most people who find my channel are really into. They're into the idea of buying long-term rental properties, but what if you could get 2, 3, 4 times the amount of cash flow with, a fraction of what it would require to get into that long-term rental out of pocket? It's a win-win across the board. So make sure you stick around for the entire video because I'm going to give this over to Michael and Katrina for today so that they can get directly into their QuickBooks and show you the specific numbers, which I know you guys have been asking for. So without further ado, welcome back to the channel, you two. Always great to see you.
Thanks so much for having us, Matt.
Yeah, we really appreciate it, Matt.
So I am switching over the host controls over to you guys so that you can share your screen and get us into some of these the devil's in the details, they say, right? So let's see what the numbers look like.
Yeah, so we're going to pull this up in just a sec, but I think this is really important that we actually show real numbers here because, there was a few people that commented on the videos earlier saying, okay, well, like, great, revenue is awesome, but like, how much money are you actually making?
And keeping. Yeah.
Because, there's a lot of people in this industry where they'll basically give you kind of the headline number of how much they're supposedly, quote unquote, making. But, as I like to say, when the tide goes out, you find out who's wearing their pants. And, unfortunately, it's not what you make, it's what you keep, right? Because like revenue obviously has expenses that comes off it. So everyone loves to do the addition, but no one loves to show you the subtraction, which actually, matters. So what I'm going to do now is I'm just going to pull my screen up here and we're just going to take you like live into our actual accounting system. So you can see a real example with real numbers and real performance. So where I'm at right now, so I'm inside of my QuickBooks account. So on this particular property, we're going to show you one, if you're, a lot of people think, okay, you must need just tons of money to get something like this going. And so this example is actually a 1-bed, 1-bath condo. We're currently no longer managing it, but we managed it for about 2 years. So what I want to show here, so this is
So this was one of your first deals, right?
It was our first deal actually.
Oh wow,
So
okay, perfect. That's what I wanted. I wanted to see, like, starting from nothing, right? Because you didn't have any handouts. I mean, you didn't have any advantages that other people would. In fact, the advantage that other people have that you didn't is that you now offer mentorship that you didn't have access to, right?
Correct.
That's correct.
Yeah.
You had to build from ground zero. I just want to make sure that that's clear, because to turn that into $1 million company in under 2 years is still blows me away. All right, go ahead.
I hadn't even stayed at an Airbnb until we started our company.
That's right.
That's how
really?
much we didn't even have experience in it.
Okay,
Yeah.
that's good to know.
So where we're at right now, so in the time period here, so this condo we actually launched in kind of October, November timeframe back in 2018. So if you look at the top here, that's the date range. So I want to show just a couple of things here, because like the first month and a half, obviously there's some startup expenses. So I just want to show you a few things here. So in here, this is an income statement for this property from October 1st till December 1st. And this is really more to encapsulate like the startup phase of any new listing, because when you first launch a property, depending on what business model we do, like, so for this case, we're going to show you a rental arbitrage example. So again, this is where we go out, we rent a property for X dollars amount per month, and then we're reselling the nights, obviously at a higher price than what it's costing us per day, and then we're capturing the difference here. Okay?
And to be clear, when you did arbitrage, which you're not doing anymore, you're doing partnerships now, but when you did arbitrage, it was with the permission from the homeowner, the landlord. You were essentially the tenant and then subletting.
Well, 100%. In a way, it wasn't really subletting because we have a permission slip from the landlord themselves saying, we're not actually staying in the property, you're allowing this to occur, and you understand that we are using the purposes of your property for short-term rentals. And they sign and agree. So we're very transparent and very clear with our partners and landlords.
Perfect.
Yeah. So what I'm going to show here, so this is kind of the startup phase. I'm just going to break this out kind of piece by piece. So I'm not really going to show a lot of or go into much detail on the income side here, because that's kind of irrelevant for this example. So the actual startup expenses, if we're doing rental arbitrage, basically come down to a few things. First, if the place isn't furnished or maybe semi-furnished, then you're going to have to furnish a place. Then you're also going to have to come out of pocket for a damage deposit. And then you may have to come out of pocket, well, you will for the first month's rent, okay? So in this case here, so diving into the expenses, so here, this property was actually partially furnished. So it was maybe 500 square feet, like it was a very small property. So we started pretty humble beginnings. So we put about $1,600 into, and like, this is us driving all over town, picking up, $40 coffee tables,
Off of Kijiji, Facebook Marketplace, hustling. It was just us.
So then, $60, I brought in a handyman just to help us set up some of the equipment, the electronic e-lock, things like that. Supplies, that would have been us literally getting like towels, bed sheets, a few, just stuff that you need to kind of get a place going. Some of these other expenses, bank charges, yeah, that's fine, whatever. Promotional, that was just us going and getting a couple bottles of wine to get the place going. This expense here for roughly $80, that was the U-Haul of us going and renting the truck to go get everything going. So this first month, we're showing about a month and a half here, so the rent was kind of prorated. So I'm going to pull it over to a spreadsheet here just to give a better example. So as we showed there, so our out-of-pocket for furnishings in this place was about $1,600. We spent about $420 on supplies. We had $60 for handyman. We got a couple bottles of wine to get it going. We paid the U-Haul company roughly $80. So first month's rent on this place was $1,050. So again, one bed, one bath, not overly expensive. Then we had the damage deposit as well. So our total investment in this property was out of pocket initially was just shy of $4,300. So you don't need a huge amount of money to get this going. So that's, let's just be clear on that.
Key number one.
So the other thing I want to show for this particular example, so I'm going to jump over to this spreadsheet. Well, that's part of our QuickBooks now. So this is showing the total performance of this property from the time we had it under management to the time we no longer. So at the January 1st this year, what ended up happening was the owner actually wanted to take this property back because the economy is not super great where we are, and her husband was out of work, and they were in a place where they wanted to actually literally self-manage and try to earn more income. And we said, absolutely no problem at all. It's obviously your property, so you're free to do with it as you wish. So,
and was that at the end of your lease, or they tried to break your lease early?
No. So we just carried out until the end of the lease that we had with them, and then they just took it back over again, and which was totally fine. So now what I want to show, so again, in the first example, so October 1st, 2018, okay? So again, from the time we started to the time we finished, this property ended up bringing in almost $64,000 in bookings, okay? Now again, there's a lot of people in our industry that'll stop there and say, all right,
we made 64,000.
And they're, again, everyone loves to do the addition, but no one does the subtraction. So let's show you kind of the full picture here, okay? So obviously revenue, great, awesome, but okay, so, well, the Airbnb is going to be taking, their 3% fee off, booking.com, a few of these other sites we advertise on, they charge commissions. We had, just shy of 27 grand in rent. We had some, occasionally you have to send a handyman there to fix stuff up, something breaks, something needs fixing, whatever. Okay, so gross profit after everything was about 24 grand. Now you have other expenses. So, we had internet in there. Again, here's our initial investments, of just some other furnishings and stuff we had to buy. Okay, so if we go all the way down to the bottom, so after that was all said and done, so all expenses, so maids were paid, utilities were paid, rent was paid, Walmart got paid, whatever, like after everything was taken out, and as soon as we finished managing, we kept more than 15 grand essentially, right? So if we jump back here, so because we got the property back, the owner actually gave us back 100% of that damage deposit. So I just made a calculation here. So basically the total investment, if you actually deduct the damage deposit, was really only $3,200 because we got that cash back. So if you look at how much we put in here versus how much we got out, our total ROI on this deal was more than 300% in just, about 2 years and a few months. So again, that's just a rental arbitrage, 100%.
One bed, one bath, very small.
You cannot complain about these ROIs compared to cash on cash for long-term rentals. You guys are blowing it out of the water.
Oh, we don't own it, right? So we just controlled the property for 2 years and we were able to make $15,000.
Right. You don't have the same risk exposure with that first mortgage lingering over your heads as well.
Yep.
Now, what would happen in this case if, worst case scenario, a worldwide pandemic hits and all of a sudden short-term rentals are shut down? This is in spite of that happening, right?
Correct. Yeah. So again, a lot of people will, and there was other people in our industry too, like they would show all this money that, again, they were supposedly making, but a lot of people, they actually they gave units back and actually downsized during the pandemic. So
during the time that, we've operated our business, a huge thing for us is integrity. I know we've talked about that before, but we've never missed a rent payment. Even a partnership payment, we've always come through on that. Any of our subcontractors or maids, they're our team, they're our business. We've always had the payments with them. Even this year, we gave our maid staff a bonus and our handyman as well. Yeah. And that for us, we understand it was a tough year for everything, especially our maid staff having to, have higher protocols. We just appreciated that so much. So it's crucial for us to make sure that everyone's being treated fairly and understanding that it was a really bad year, but our business still did extremely well during.
And what do you attribute your ability to sort of overcome the difficulties within your own business? Obviously, I would say simplistically, it just boils down to fiscal responsibility, right? You guys just were prepared to weather storms when they came up. Was that what you how you survived it? Because we talked to Sean Rocky too, right? He's a friend of ours. He runs a very successful channel, Airbnb Automated, on YouTube as well. Does a lot of arbitrage work. He did the same thing. He didn't fire anybody, right? Everybody got paid as agreed. And when you get these comments from time to time on videos talking about, these speculative situations and people who are allowing fear to sort of determine that they're never, ever going to end up going into business for themselves, I would imagine you guys could kind of safely approach someone like that and explain, listen, as long as you're managing this responsibly and treating it like a real business, you should be able to overcome, given that this is the worst any of us have ever seen, at least in our lifetimes. Great Depression might have been worse, right? Going through world wars might have been worse, but at least for purposes of now in modern day, we haven't seen anything worse than this.
Yeah. So, I mean, at the end of the day, and you brought up the example of Sean, I mean, we have tremendous respect for him. He's done just a huge service to, the short-term rental community. And, what he teaches is very valid. And, we think it's, there's a lot of merit to it. I mean, obviously, from our standpoint, we're pretty agnostic to deal structure, whether it be arbitrage versus partnerships. And we'll get into a partnership example here from a number standpoint in just a moment. But essentially what ended up happening in our case was we got up to around 5 to 6 properties, doing rental arbitrage. So again, doing, furnishings up front, damage deposits, leases, and it was fine. We were generating very healthy profits every single month. But in our case, because we started with pretty humble beginnings, basically what happened was we essentially ran out of capital to be able to expand further. Because under this model, you have to understand that there is kind of the cost of acquisition for every single door, and it takes time to recoup that money in order to go into the next deal.
Yeah, so you kind of mentioned, I mean, what's been, the biggest change in our business? Yeah. The game changer was partnerships, because I mean, as low as this is to get in with that barrier to entry, you have to still know you still have overhead, right, with your lease agreements, and have that monthly overhead. For us, we just eliminated that. We eliminated the factor that you had to pay for furnishings, that you had to pay for damage deposits, and that you had to have a monthly lease agreement. We had a management meeting again. We said, hey, how do we, really start growing this without using our own money? Because we had a discussion with our accountant, and he's like, you guys have a lot of dead cash. Like, a lot of, these are tied up in your equity in your business. So that's really where we started to expand, and definitely we're able to utilize partnerships.
Yeah. So essentially what happened was we got up to around 5 to 6 doors, and then we're just like it was good. Like, again, money was coming in, like we're not complaining. But what happened was we're just like, well, it seems to be that leases, damage deposits, and furnishings are kind of the 3 biggest inhibitors to help us to expand further. So what if we just stop doing that altogether? And I'm not exaggerating, we had this conversation. So then we thought, it was like, okay, well, maybe we could just not do that and just start partnering with the owner directly. And then, if they want to work with us, we just say, okay, that's great and wonderful. However, these are the terms. And if you're willing to, invest in the furnishings to get the place going, well, then we could actually partner together, and, we'll split the income and expenses of whatever we make. But under that structure, Mr. Homeowner, you actually have a lot more income potential to be made on your property than what you're currently asking for in rent. So if that's attractive to you, then let's
have a conversation about that.
Yeah,
it's brilliant, and I'm sure you guys are leading this space on this idea. Real quickly before we jump to the numbers on the partnership, because I can't wait to see that. I just want to remind the viewer, email the BNB Bootcamp at VIPfinancialeducation.com address if you want to get in touch with Michael and Katrina. They've been so generous with their time for our audience. In fact, they even decided to extend the discount that they were providing through 2020 of 33% off of the price of their coaching membership, which normally comes at $12,000. So they're giving our audience an $8,000 price tag that's temporary. So if you guys are looking for guidance, don't miss out on that. And if it's not the right time, they're going to tell you. Don't hesitate to reach out just because you're concerned that it costs money to have somebody there showing you how to do this properly. And please don't forget that we just wrapped up an interview with a gentleman that's a student of theirs that literally locked down over $40,000 on his very first deal in his very first month because of Michael and Katrina's contribution in his business development. So very, very big things to come by having the right people on your team. And I have not found anybody that's doing this. In fact, I would certainly recommend that you guys get out there and do what you can to try and trademark the partnership concept in some way so that you guys are really recognized. Because I haven't seen other people talking as much about partnerships as I have arbitrage. And arbitrage has been pretty popular and it's worked out really well for a lot of people. But like you said, there's a point where you've sort of exhausted your liquidity. And this channel is fabulous because we do help people get access to capital that can be used. I did a video recently that I'll throw in the description where I showed that when we went out and helped somebody get access to just a $20,000 unsecured debt weapon, we call it here on the channel, and we used that over and over again. We just wash, rinse, and repeat the process. We were able to drive cash flow to the tune of about 5 or 6 times higher than where we originally began in just an 18-month period of time. So from $1,000 in net cash flow up to $6,000 a month in net cash flow in just 1.5 years. So I'm falling well short of what Michael and Katrina have actually accomplished within their business, turning that into a 7-figure business in just 2 years' time. But it still shows that within that range, it's all really pretty impressive. Let's go to the partnership side where, as proven in our last interview here today, money out of pocket may not be required to get some pretty cool things to happen. So I'm not sure if that's a part of this case study, but why don't you dive over there and just kind of explain what happened with your partnership deals?
Yeah, 100%. So just to kind of recap, so the first transaction we just kind of walked through here. So again, this was on a 1-bed, 1-bath rental arbitrage deal. And just to kind of give you some context on this as well, so I'm just going to show the actual link to the property too. So as you can see, like it's
simple.
It's very, very simple. So it's not, it's cozy. It served its purpose and,
it's
got
inviting.
us going. Yeah.
Sure.
So now walking over to the partnership arena. So let's just dive into the numbers there. So what I have here now, so here's just a couple homes that we manage, and essentially how this came to be was a homeowner. He's a major home builder in our city, and he was sitting on 2 properties for well over a year, I think like a year and a half.
Brand new properties.
Gorgeous properties, but he couldn't sell them because the real estate market and where we live, anything like $1 million and up, there's just very little buyers.
Yeah.
And because they also changed some of the mortgage rules, so you had to be a very strong borrower in order to even qualify. Without getting in all the, he couldn't sell the properties essentially for what he wanted. So he came to us and he said, well, I've heard about this Airbnb short-term rental idea. Like, what do you think my properties can make? So we said, okay, well, I mean, we can't guarantee results, but, based on past experience, we can anticipate probably, from this to this, if that works for you, as long as you're willing to invest in furnishings to get this going, then wonderful, we can help you out. So walking through the numbers here. So these launched at different times. So as you can see on the numbers, so this is from July 1st, 2020 of last year.
Till today,
like February 22nd, okay? So far in where these properties, so one launched, I think in August, the other one launched in October, if I'm not mistaken. So far, excuse me, these 2 properties have brought in just shy of $95,000 in about a 6-month time frame. And of course, again, obviously, there's costs that go along with this, right? So we have, Airbnb fees coming out, we have our maid staff, a snow removal team, repairs that happen at these properties, furnishings that had to get, so essentially he gave us the money, we went and purchased the furnishings. That's why it's reflected on, the statement here. So again, you're going to have internet, software, some supplies, all that stuff. So after all that's said and done, we have kept more than $33,000 in profit, bottom line, after all the expenses were taken out. And that's in about a 6-month time frame from when we began.
Yeah, and keep in mind, we didn't have to put a single penny into this. So we were profitable from day one on both properties. And so the landlord in this case, actually, I think altogether, he put about $50,000 in furnishings for both properties.
Yeah. To
get them up to snuff. And we can show maybe some pictures of it here.
This is from July 1st, right?
July 1st, 2020.
So coming up on March 1st. So it's actually getting close to 8 months.
8 months.
8 months.
So at 8 months of 33.6, so you're obviously, over $4,000 a month in actual cold hard profit on these.
Well, and one of them didn't start till October as well.
Yeah.
Oh, okay. Gotcha.
So
but I mean, still, it's absolutely fantastic. I mean, there are people listening right now that could replace their jobs, the income that they're earning from a W-2 position, by just this example alone. And this doesn't even demonstrate what you guys have accomplished by compounding this up with a portfolio of these types of properties and with nothing out of pocket. right? So if somebody only hired you with an $8,000 commitment, they already would have 4X'd their money just by having you in their corner showing them exactly how to replicate this.
So we just want to give some context on this as well. So again, like here was the example, 1 bed, 1 bath, like again, humble beginnings, you know, starting with very little in the way of resources. And like just to show what these homes kind of look like. I mean, this is obviously a different type of product altogether. So, you know, obviously the income potential is substantially different under these certain examples here. So as you can see, you know, so that's one of the homes.
This one does have it. They both have elevators in them too.
Yeah.
Like they're beautiful properties, right on the river valley. Like they're executive style, but our interior designer furnished this as well. Like it's just, for us, we wanted to make sure, even the point that we're at our business, to offload all these. So she completely set this up from the beginning, and you know, it was a service to the owner as well. So at this point, I mean, everything was set up and subcontracted out, and then really from there, we're able to manage it.
It's fabulous. Well, and you know, what I would at least recommend people understand, you know, is the difference between humble beginnings, where you've got you two all by your lonesome selves trying to just scratch and claw your way up into a profit margin for yourselves, and you've got this little 1 bedroom and you're probably scared even trying to make that work, to somebody like, you know, Nathaniel, who comes on and shares, well, I went straight for, you know, the big guy, right? Why tinker around with this small stuff? I'm just going to approach somebody, ask the questions, and see what comes of it. And even with 0 track record of success inside this space, with a little help from you guys, was able to get the homeowner to actually partner with him. And not only did he skip the arbitrage side and didn't have to put the money in from a lease standpoint or even a furnishing standpoint, with 0 money out of his own pocket, he's coming into some of this really nice high-end property income. And so I think it really goes to show. Now, where I would say he was probably really wise, and where I would assume you guys offered some guidance, is, look, I'm not going to come in and try and split this with you, right? Let me just prove myself over the first 90 days, take a 10% cut, and then we can have a look-see and renegotiate in a way, right? And I think that having the flexibility to understand how you can sort of compensate for your lack of success or history, and also maybe a lack of wanting to put your own money towards it and so forth, that was really smart. You know, in my opinion, I think that just shows a lot of experience. So this is the kind of stuff that I think you pay for when you hire people like Michael and Katrina. 2 very kind of different examples, but all combined together have created $1 million worth of business revenues for you guys thus far. And just, you know, at least at the 2-year point, I'm assuming at this stage, you guys have started really coming over the top on that number. Where are you at now as far as your totals?
So as far as totals now, we're since we began, I mean, well, we're on the video right now. Why don't we just take a look, right? So
let's see, why not?
So let's just see here. So I'm going to jump over to our profit and loss, and I'm going to jump this back a bit, because really it was October when we started. So total income since we've began, about 1.35 million since we started.
Incredible. So happy for you guys. It's always a total treat when I can, you know, lock you down for one of these interviews, you know, and it's getting harder and harder since you're spending more and more time at the beach. But I do appreciate your willingness to join me, you know, when I'm not at the beach. And we, you know, I think we make a great partnership ourselves. So for those of you guys that are listening, check the description. I'm going to put the links to the playlist of our other interviews with Michael and Katrina, so you can see just what they've done and what others who are working with them are accomplishing. I've said it before, I'll say it again. I'm going to continue to keep saying it. And that's, if I lost everything tomorrow, this is what I would be doing. And expect this to be part of my game plan moving forward as well. In the meantime, guys, email BNB Bootcamp at VIPfinancialeducation.com, and make sure you reach out for that introduction call. This is just one where they try to determine, hey, are you guys actually a good fit. If you're not, they'll be the first to tell you. And there have been a number of people that have come off of this channel that either they or we or collectively we've decided this is not going to be something you should pursue at this particular time. Mm-hmm. They are completely transparent about that. It's of zero incentive to them to work with somebody who's not going to actually put results on the board. So make sure you email, put conversation in the subject line. Don't forget to put your first name, last name, and contact phone number in that email body as well, please. And until we see you on the next video, of course, you guys make it a great day as usual. And we'll see you guys back here for another one soon, right?
100%.
Yes, it's an honor, Matt. Thank you so much.
We really appreciate the time.
We always appreciate you guys too. Thank you so much.
Thank you.